Welcome to Prime Venture Partners Podcast, a podcast for entrepreneurs looking to build and grow their startups. Learn about uncommon strategies and common traps from makers and doers of startup ecosystem.
This is Amit Somani from Prime Venture Partners. Prime is an early stage venture capital fund based out of Bangalore. We invest in early stage tech and product driven companies. We're delighted to have with us today Vinay Bagri, co-founder and CEO of Niyo, one of our portfolio companies. Welcome to the podcast, Vinay.
Hi, Amit. Thanks for having me here.
Thanks, Vinay. So Neobanking is all the rage in fintech and financial services these days. Why is it so exciting for everyone? What's going on? Can you talk a little bit about that?
Sure, Amit. So Neobanking has been a rage for some time across the world. India had just taken off, the announcement started coming in a year or so. Why it is so important, Amit, is that when you look at costs of various banking services, you keep going back to Bezos' thought that your margin is my opportunity, and there is immense opportunity in banking in all the segments. Now, the major cost, if you see for all banks or most banks, is infrastructure and people. You will see that the fanciest of the landscape in every country or every city would belong to banks, whether it's Nariman Point here or whether it is, New York elsewhere. Now that naturally cost has to be borne by somebody. Normally it's the customer. And Neobanking is all about building a bank in the cloud where you don't have those kind of infrastructural costs. You don't have a huge hierarchy of people and passing on that benefit to the customer. So that's why it is important. I think it's something which is going to be growing substantially as the time passes.
So Vinay, great points. So one, of course, is the cost, right? And making it more accessible and more inclusive. The second thing is really the customer experience. Do you think that new age tech companies can provide a much better customer experience? What are the new age companies going to be better at? And what are the classic banks going to be better at?
In terms of customer experience, there's no doubt. See, what happens is that most of the banks who are there in existence run an old tech, naturally have a tech team which is, tuned to work a certain way. So not that they will not be able to provide it, but it'll take time. And, time is in the favor of the new age neobanks. Who will be able to do a much better job in terms of customer experience. Other than that, there are various niches within banks which are large enough for people to go and excel there. So we'll see a lot of, used word like unbundling of banks, where certain segments, traditional banks will continue to do well. Example are areas which require a lot of trust and a lot of money getting deposited, etc. Whereas certain areas which are fast moving, payment related, lending, where I think, the new banks are going to excel.
Great. You used to be in one of these older banks, or actually many of them, right? Can you talk to us a little bit about your background and also how the journey has been from being a classic banker to a new age fintech co-founder CEO?
Yeah, so I've been a banker always, even now continue to be a banker. Almost 15 years, most of them with StanChart, almost a decade, and then on both sides of balance sheet. So I've seen around 6-7 years of liabilities, 6-7 years of assets. So as far as retail banking is concerned, I've basically seen it all. Why did I move to the other side of the I would say of the structure? The reason is that till 2015. Banking in India was very different because there was no eKYC. There was no OTP based KYC. So as long as you're meeting somebody in person to do KYC, the scope of Neobank was limited. But when it opened up, thanks to Aadhaar, the opportunity to really disrupt, and I know that word is used very loosely, but because of Aadhaar actually, and you would have seen with UPI and all these things happening, that because of the entire stack, the banking is getting disrupted every single moment as we see it, and I wanted to be in that bandwagon. And of course, one of my co-founder who's not listed as co-founder, which is Sanjay from Prime Ventures. So he pushed me into this, and I'm very, very delighted to be where I am today.
Sounds great. So maybe we can jump and talk a little bit about the Niyo journey itself, right? There are several different products you guys have launched. It's been an interesting sort of rapid fire journey over the last 3.5 years. So can you talk about, a couple of the products that you guys have, and maybe we'll drill into one of the ones that are sort of more recent?
Sure. So, Niyo was basically inspired by my last organization. So I was working with ING, which got taken by Kotak, and then I moved to Niyo. So ING had a product called ING Direct, which was basically a bank based in the clouds, and it was doing extremely well. I'd seen its operation in Australia, and I was really fascinated by it, and wanted to basically create a similar bank in India, which was on the cloud, digital, and can be a large bank. Now, what we do, Amit and Niyo, is that we try and identify segments which are huge, which are either unserved or underserved by current banks, and where we think that as Niyo Bank, we've got significant competitive advantage. And based on that segment, we keep rolling out products as and when those segments turn up. So for example, one of the big instances was demonetization. And the labor law changes which came in with demonetization, which really opened up the whole salaried segment of blue-collar employees. And that's what our flagship product really got rolled out. And we got 1 million plus users on that product because we think that no other bank today has got the capability to understand and serve the segment the way we do. Similarly, we saw a trend last year around Indians, thanks to Instagram, Facebook, and these social media things, want to really travel. And, the trend has changed whether the first loan is no longer, a car loan or a home loan or anything else. It's a travel loan. And the whole country seems to be traveling. We have 25-30 million people who will travel this year, which is likely to go to 50 million people. Again, the service as a bank to understand a travel customer and really serve them well, we think is pretty broken. And we thought there was a chance to introduce a kind of a bank account for somebody who thinks himself as a global citizen. And that's where Niyo Global came in. So while, we've launched various products, the two products which really stand out is Niyo Bharat, which is a salary account for blue-collar employees, and Niyo Global, which is a bank account for global citizens.
So let's talk a little bit about Niyo Global. Let's say I'm a traveler and I'm traveling to some country. I'm going to Australia. How does Niyo Global help, and what is unique and differentiated about that product that is not there elsewhere in the market?
So for every product we build, Amit, we look at 2-3 things. So the first, of course, is consumer value. That whatever the current banks are providing, which is, like I said, bank's margin, we provide a better value to the customer because our costs are low. So that's the first thing. And I'll come why Niyo Global, if you're not carrying Niyo Global when you're stepping outside India, you're losing money every single day. Okay, so that's value. The second thing we look at, Amit, is the convenience factor. What is the UX of the product, the UX experience of the product? And third, of course, is for whatever reasons, if you're stuck, then how is the customer service when you have to reach out to us? So these are 2-3 things which we focus on all our products. So let me talk about Niyo Global and each of these three things and how they kind of pan out. So first, in terms of value. So if you don't take Niyo Global, what are the options? Your option is cash, a forex card, or a debit or a credit card. Cash, of course, you'll have to pay a charge up front to convert it. If you get back cash from your trip, again, you have to pay a charge to convert it. Or maybe, I don't know where you'll keep the cash.
Not to mention the hassle of carrying.
The hassle of carrying, yeah. Of course, all those are anyway there. The second is a forex card. Famous multi-currency forex cards. When you go to Dubai, let's say, and you've loaded dirhams, but guess what? Normally you load either less or more. In any case, then you have to, when you move to your next country, let's say from Dubai, you move to Europe, and you need to use euros here, then you have to convert double time. So first INR to dirham cost, then dirham to euro cost, or euro to dirham cost. So by the time you come back and you've done all your mathematics, it's a very, very costly way of carrying a foreign currency. Not to say the hassle of getting your first forex card itself. You cannot get it in your house. You have to go walk in the branch and do it. And when you get money back after your travel, again you have to go to branch and kind of get it converted into INR. So multiple conversion costs. And so most of the people, what they do is whatever money is left on the forex card, they go and end up spending in your duty-free shops. So it's unnecessary shopping. So everything kind of adds up to a very I would say a broken process and a very costly process. Third one, of course, the easy one. You carry your credit card or debit card, simply keep swiping it. Only thing you will never get to know what is the forex charges.
You will get to know when you're...
Yeah, you will not get to know at that point in time. After 1.5 months, suddenly you will see one statement. You will not be able to put heads or tails to, you will have forgotten what you did. But you will be down anywhere between 3 to 6%, depending on what kind of customer you are for the bank. So these are the 2-3 processes which are there right now. In case of Niyo, life is very simple. The way we have designed it is based on my own travel experience and for travel experience of all the colleagues in the product heads who were building it. Very simple. You load INR. Our mobile app will give you a real-time currency conversion rate. And when you swipe your card, you will get charged the same rate, not a penny more, not a penny less. And that rate is actually the Visa exchange rate, which is very, very, very close to IBR. So it is, in a way, let's say if a huge multinational or a huge company like Tata, somebody was buying Forex, he'll get a Forex rate, a wholesale Forex rate. That's eventually effectively what we have brought in for a regular customer. So that's in terms of value. Convenience, of course, you got a beautiful app with multiple travel features, including ATM locators which tells you about where to find certain attractions, anything to do with travel. Built on the app, working seamlessly, notifications, SMS, email, OTP coming on email. So even if you don't have your SIM with you, you can do all the functions which you need to do when you're traveling abroad. And third, of course, customer service. We are probably the only bank in the country where you can do complete service, from lodging a complaint to getting it solved, to solving for your lost card, to ordering a new card, everything on WhatsApp at 24/7, of course. So naturally, for these reasons, why we have a fan following. Our NPS rating is 80 plus. I'm sure nobody can even think, current banks can think of that kind of NPS rating. And our App Store rating is around 4.7, 4.8, which is at par with the best global banks in the world.
Wonderful. So I have two questions. One is around the product, right? How did you know that you're getting to product market fit? So you clearly start with the hypothesis, right? Your margin is my opportunity, convenience, safety, trust. But how did you know that you're getting to product market fit, number one? Number two, how do you think about distribution, right, for a product like this? Is this all digital, it's offline, it's hybrid? Maybe you can talk a little bit about that for the benefit of other fintech entrepreneurs out there.
Sure. So let me answer the product market fit question first. So my firm belief in product market fit is that you should not need a sales team if you got the product right. And it should be all inbound, referral driven, etc. So we realized that we got the product market fit when our relatives start calling, and we had to do a waiting list when basically the demand exceeded supply. And that happened for all our products, fortunately, touch wood. So we understand the product market fit when customers are referring their friends and relatives. They are coming at a pace at which we find it difficult to service. I think that's the point when you know that the product is going to do well. So that's one. The second way to see product market fit is that, how is competition reacting to it? So we had basically almost all large players panicking and calling out that why you're doing it is, and you'll break the market, everybody lose the margin, XYZ. So that somewhere you've hit the chord with the customer and with the competition. So that's product market fit. In terms of channels, I firmly believe that we should always have a multi-channel approach. In banking, actually, fortunately, I've seen all kind of channels do well. You have to be, of course, very careful about compliance and about KYC and what can go wrong. So that is something you would ideally want to control yourself. Other than that, from a sourcing perspective, I think you can use multiple channels. To give you our examples, how did we do? What did we do? Of course, we started up with a close group for product market fit. And once we knew that the customers loved the product and the product worked seamlessly, especially because money is involved in any banking product, so everything was working fine, is then we opened it up for channels. And channels depends on the product. So for example, for Global Card, now naturally, who's a channel partner? A channel partner is a travel agent, or channel partner is somebody who is, let's say, a student counselor, where students go when they are going to study abroad. So identify points where a lot of our target segment will go and meet them, and then ensure that anyway there's huge value for the consumer, that the channel partner can sell the product as a win, whether for money or whether to show that he's adding value to the customer who's walking up to that channel. So we positioned it that way, and of course we've been extremely successful in doing that.
So for Niyo Bharat, distribution was slightly different, right? Can you talk a little bit about how do you reach blue collar workers in pan India, right? There are millions, if not tens of millions of these folks.
Yes, 100 million odd people who'd qualify as organized, semi-organized, unorganized, blue-collared employees. Again, a distribution point of view, Amit, it is very similar to global. You'll be surprised that, what we're looking at global, for example, is a travel agent where a lot of people are converging, which can be online or offline. It can be Yatra, or it can be like Akbar or whoever it is. Similarly, for Bharat salary accounts, that the travel agent is basically replaced by an SME. Now, an SME has got 200, 300, 1,000, 2,000, depending on the size, whether it is a medium enterprise or a large enterprise. But basically, it's a point where all the laborers are, or the employees are congregating. So they become kind of our channel. Now, what we have to ensure is, again, that they see value. They should know that, when they give this product to their employees should say thank you rather than come with the issues that something is going wrong or something's not working. So as long as that is there, it's again, for most of our employers, Amit, distributing our product is almost like a value they are adding to their employees because of the value we provide to the employees in the product. For example, there is no product in the country which can say that I can give you a full-fledged digital banking experience with zero minimum balance charges, with zero non-maintenance charges, with zero non-transaction charges through your life. Nobody else can do that. And you would know some of the large banks like SBI, and there was an RTI against Bob, for example, government banks, right? A large part of their bottom line is coming from minimum balance charges, which is getting charged to the poorest of the poor. Now, why on earth would you want to do that? These guys are willing to pay some money, but we need to be transparent. So like we provide nothing free. We very, very unit economics, that may not be a great idea, but we are very, very unit economics savvy startup.
It's a great idea.
Thank you. So we don't do any product which doesn't make unit economic sense. So we charge 200 rupees to these users, but then they know that once they paid 200 rupees for a year, they are not going to get charged anything extra. And that transparency they deserve. They should not be devoid of the transparency just because their salary is 10,000 rupees and not 2 lakh rupees. So most banks today would give everything in a platter to somebody who earns like a 24 lakh rupee. But somebody who's earning like a 10,000 rupee or a lakh rupee a year is actually killed at every single level, whether it is a private bank, government bank, anybody. And we are there to change it for them.
Can you take a few examples of customers on either side, on Niyo Bharat as well as Niyo Global, whose quote-unquote lives have been transformed as a result of this? I'm sure there's a lot more Bharat customers who are not even under the umbrella of financial inclusion or financial services, or may barely have had a bank account. Maybe we start with Bharat, right, where this has really been a material change in their quality of financial life.
Significant, Amit. So I'll give you we've touched many lives, but where we've been transformational is people who are not too literate. So they can, understand tits and bits, but they can't read a sentence, or they can't really read comfortably in, let's say, English, where most of the apps, including some of the larger banks app, are in that language. So one is we've got the Bharat app is available in 10 languages. So practically it covers 90% of the country. The second interesting thing, Amit, is that the app talks to you. So for every feature or every transaction, you just have to tap a button and the app will talk to you in your language. It will tell you that this is the transaction you did at this point in time, at this shop. So if you don't have to read through the whole sentence, and if you find it difficult to read for whatever reason, you don't have to worry. And similarly for every single feature, like we've introduced bite-sized mutual funds, bite-sized salary advances, very, very transparent, very, very easy to understand. And that's where I think we are on a journey. So if you look at it, 1 million out of 100 million, we are not even scratching the surface. And the reason is that, we've ourselves been very, very, very conservative about how fast we grow. Reason we want to be sure of the product. We want to make sure that it adds value to the user and they hopefully use it for their lives. And that's really a change for them, because normally they see banking as somebody where the moment they change their job, they have to quickly take all the money out. Otherwise, people will start hammering them with various kind of charges. So it's a journey where we have to change thought process, we have to change how people interact. But I think we are doing a great job on it, and we've got a great momentum ahead going into 2020.
So I loved your point about the value add for partnerships in terms of the distribution channels and the distribution partners. Given that you come from the banking world, maybe we can talk about kind of classic fintech partnerships, right? So a lot of new age fintechs, they need to partner with banks or NBFCs or other classical institutions. I know you have several partnerships yourselves, right, with various banks. Can you talk a little bit about, like, if you were a new age fintech entrepreneur, how should you think about partnering with the sort of classic institutions as they were? What is the method to that madness?
Yeah. So Amit, the way the regulations are in India and most of Southeast Asia, is that you have to partner with a bank if you want to become a bank. Right? It is unlike a digital bank license, which let's say Revolut enjoys. So if you look at my global card, it is nothing different from Revolut. Just that they can do on their own banking license and I have to do with the partner bank license. So partnership is a given in India and Southeast Asia. Now, how do you make a successful partnership? So the way I've been lucky, I've been on both sides of the table. So I understand, whenever I'm going for a partnership with the bank, I just put the banker hat on and say, who is the partner who I would want to partner with? First thing, Amit, which comes to my mind as a banker is that I should not lose my job in this partnership.
Survival of the fittest.
So the thing, a banking or any partner who's regulated by RBI or any regulator for that matter would be very, very, very careful about with a new fintech partner wants to partner is that, are you KYC compliant? Have you systems built for money laundering, tracking any suspect frauds happening, customer service? It should not land up that the partner banks, mail IDs and call centers are getting flooded by customer service. They will never partner with you. So you have to give them that confidence that you are more than committed towards KYC guidelines, regulatory guidelines, customer service, banking ombudsman, recon, and these things. So that's the first thing which you need to provide confidence to your partner bank. And then starts the commercial angle, Amit, where eventually it's a symbiotic relationship. There are three people in the partnership who need to see value. If one of the three doesn't see value, it is only a very temporary and a fleeting partnership. The partner bank or whoever the partner fintech is, they need to see value. Startup, we need to see value. And the customer. So these three parties, each of them have to see clear advantage. Otherwise, it is not going to survive.
Sounds great. So, switching gears, let's say I'm starting a new company. While you said you've been pretty fortunate with product market fit, and I'm evaluating an opportunity as a new age, entrepreneur. How should I look for opportunities in terms of, where is there going to be, viable business model? Where is there going to be this magical auto product market fit, etc.? How would you go about doing that? What advice would you have for our entrepreneurs here?
Fintech? Yeah, I can talk about fintech. That's the only thing I know actually. So, Sumit, the way I would do it is, I would look at successful banks. And for example, I draw a lot of inspiration from Kotak. Uday Kotak himself is like an unbelievable entrepreneur. So the way you look at it is, if you look at, for example, Kotak, or for example, Bandhan, or for example, Bajaj Finserv, all of these in a way are startups. Some maybe 10-year-old, some 14-year-old, some 15-year-old. Yeah, that's what they are. And they have billions and billions of $1 billion, 30 billion, 40 billion, 50 billion, this kind of valuation. Now, what will be really interesting for a fintech player to do is to look inside a bank, for example, like Kotak, and look at verticals which have just exponentially grown. It can be maybe a credit card vertical, it can be a CASA vertical, it can be a mortgages vertical, it can be a SME vertical or whatever it is. And you would realize that each of the verticals, if they were in a startup, every single vertical will be a unicorn. So, and what happens, Amit, is that in banks, almost, especially in banks in the journey, for example, Kotak started and then early ICICI started and then Axis started. In their journey, every 2 years, they'll be launching one new product vertical. And then 3 years later, that vertical will be a unicorn. So from a fintech point of view, I would very, very strongly recommend to look at all the possible verticals which banks have. Understand if those were a startup, how many years would it have taken them to reach, let's say, unicorn status. Pick one of the verticals where, let's say, the bank did very well for 3 years and now the growth is kind of stagnated because they've not, what banks are very good at is growing very fast and becoming big, but after that they stop innovating. So look at those verticals where the bank has not innovated too much, and then you basically put a skin of innovation on top of it, partner with a bank or a partner who's hungry, who's got the product but not the skin, and then you go and kind of attack the market. So that will be
the playbook. That sounds very exciting. That is also the Prime Ventures playbook. So thank you for sharing that publicly. But no, that's great. So you have the idea, right? And you've done, studied, the role models, whether it's a Kotak or a Bajaj Finserv or whatever. How do you think about putting the team together? I know you have a tech co-founder. What is an ideal kind of fintech founding team look like? What do some of the early hires look like? Maybe you can talk a little bit about, the first 10, 15 people in the company.
So one is, I will never do a fintech without a tech co-founder because he does all the work anyway. So I think one of the important things is to definitely have a banking and a fintech and a tech guy as co-founders to start with. I think that's a bare minimum, I would say. Other than that, what is really, really important, Amit, for the first 10, 15 people is that everybody has to bring in a talent which is different. Everybody has to bring in a skill set which is different. So for example, when we look at expansion of business on the business side, we need to get in guys who know more than me on the business side. When we look at the tech side, we need to get in the first few people, have to really add and be a little, be more than, let's say, what Viren alone is or Viren and me are together. So I think that's really critical. And that's what we went about doing. We got a specialist who knew Niyo Bharat better than me. We got a specialist who knew Niyo Global as a travel segment better than me. And similarly, we got, people in tech who knew, who had worked with banking stack, etc., and who knew integrations better than probably what Viren and I knew together. And another very important role, often, not given due importance, is finance. So I think we should, at least my philosophy is, you should overload your company with chartered accountants. I think they've gone through a lot to study, they're intelligent, and they add a lot of value. So even if you get like a couple of years experience chartered accountant, I think you should be a third hire after the co-founders.
And what would the role of the chartered accountant / the finance person be that early in a startup? You don't have revenue, you're sort of barely just getting started on the product, don't yet have product market fit.
First thing he will do, he will ensure we don't waste money. So his salary will get recovered in the first 10 days of him being in the company. That's what my experience has been. And then of course, because as I said, at least our philosophy has been constantly keep looking at unit economics. I've seen large companies, large banks very easily lose focus of cost efficiency. So while revenue is very important, all of us are chasing revenue, we'll continue to chase revenue, but we need somebody who is has relentless focus on cost efficiency. And that cannot come in without a strong finance team.
Can you talk a little bit about the fundraising journey, right? Whether it's with Prime or just overall within sort of new age ideas, kind of how has your experience been and any thoughts and words of advice?
Actually, fundraising is one part where I think I would not be the right guy to speak to, for the simple reason that we have just outsourced our fundraising Prime most of the time. And Prime has done, our Series A, seed of course, and Series A and Series B largely. So I would not be able to add too much other than that. Let's say we were in a state where fielding was set. We had to bat well. And for batting, of course, we prepared. So from a preparation point of view, what was important was that we then kind of really looked at data once, again, twice, thrice, spoke to our customers and understood what they're going to talk. Because the way I understand is investors would like to talk to your customers. And if your customers are unhappy at any point in time, that's not a great time to raise funds. So what we ensured that, our customers, anyway, it's parcel of our business, but we thought our customers were really delighted with whatever we were doing. We knew the growth was good. And of course, we had done 100 rehearsals of our data and our market. I think that's what we did.
Sounds great, Vinay. This has been great talking to you. Congratulations on all the success so far and wish continued success for Niyo Bharat and Niyo Global. So thank you for being on the podcast.
Thank you, Amit. And I hope you and your family, relatives, friends, anybody traveling abroad, don't travel without Niyo card. You lose money.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.